Hey guys, welcome back to my YouTube channel. Today I want to talk to you guys about my strategy that I use and that I've been using, and I just want to help you guys out. Alright, so the first thing you're gonna need is I only trade price action. I only use indicators for confluences, not to make a decision for me. So I always start my looking at my chart. As you can see, I usually go to, let's go to AUD/USD. It's a very good pair, and it really respects its key levels. So I always start my analysis on the daily, and then as you can see here on my chart, I got my support and resistance zone are all marked up, as you can see over here. So I usually make a line where these key levels are, where it touched multiple times, and you could do that by looking back in the past. So once you do that, then I usually go to the 4-hour time frame, and then from there, if you look closely, you see I have blue lines here. These are like the miners, support and resistance, where and the price is basically ranging within these two blue lines. I always like to keep my chart as clean as possible, so that you could see what the candles are telling you. If you have so many indicators and so many lines, and you're not gonna see what the price is doing, and the best thing to read and the best way to trade is price action. So price Australian dollars, US dollar has been ranging within this 740.50 and the 7300 area, and we've been in a bearish, sorry, market for the past two days or so, right over there. The reason why I have this, I haven't got into a trade yet, but anticipating that the market is gonna go up and hit my take profit there. I just leave it there to come back to it tomorrow, and then see if I was correct, if my analysis was right. So I'm basically testing myself and see, like, I make a decision. I say, okay, this price is gonna touch this mini trend line, and then it's gonna go all the way up there, and then I could come back to it tomorrow and check, and if it did, then cool, then I know my strategy, it works, my analysis were on point, and my entry. So the first thing I do, obviously, read the chart, see where the market's going. Obviously, I make sure I don't usually trade the news, to be fair, just because it's yeah, like I'm still getting there with the news and the fundamental part of trading. I usually stay away, because wicks for days when there's news coming out, and it's just a lot of fake outs, and it's not really the direction of the market. So yeah, so I start by doing support, resistance, mini trend line to see what's up, and then I use a very good indicator that has built-in indicators. It's super helpful. It's called the RT, I think. It's called the RT or so. Let me just check for you guys. RT. Let me just go to my favorite. Yeah, right there. The RT, the Moving Average Official Indicator. That's the one. I usually use that, and what it is really it's four moving four smooth moving averages. The first one is a 200 smooth moving average, and the second one is a 100 moving average, smooth moving average, and then the yellow line is a 50 smooth moving average, and then the green one is a 21 smooth moving average. Now, this strategy is basically, let me explain it to you guys. Check this out, right? Let's say I usually try and trade the crossover. Look how the 100 and the 50 and the 21 crossed over the 200 smooth moving average right there. That's where the crossover was, right in this area over here. And what happened? Look at that. The market dropped 218 pips. Guys, come on. Look, this is easy money. If you read the market structure and you know that this is as you can see, if you look here, look how many times it rejected this area. Look at this. Look how many times it touched. 1, 2, 3, 4, 5, 6, 7, 8, and then it eventually started reversing, and the trend line was no valid, and it started going downhill. Now, how do you know? Obviously, I do not trade on consolidation period. As you can see, all the moving averages are all like going side to side. Even here, when they crossed, look here, guys. Where's my brush? Right here. Oh, sorry, that was not my brush. I wanted this. Guys, look here. Sorry. It crossed, and look what happened. Almost 200 pips. Just like that. Just like that. Almost 200 pips, just like that. Remove drawings. Just keep it as clean as possible. Now, how do you catch trend reversals and diverge? Basically, you need to be looking for divergences, and what divergences is basically, what I want you to do is to go to indicators and type in a relative strength index right here. Relative strength index, the RSI. Now click on it, and this will come up. Now this, it will not look like this for you guys, but what you can do is you can basically go to settings, to its settings, where it's settings. What? Oh, right, yeah. You go to the settings. You can copy my settings, guys, if you want to. If you want yours to look like mine, you can pause the video and copy the settings. This is the settings I have. I really like them. I enjoy the colors, and it's from the moving average. Shout out to Audie. He's a legend. I watch all his videos, and he really helped me a lot. So we were right here. Now, how do we know that this consolidation period is over? Very simple. You need to look for divergences. Now that's when the RSI comes in place. Look what happened over here. Let me just zoom in for you guys so you can see it. The market was moving side to side, side to side, side to side, side to side, and look what was happening on the RSI. Bearish signal, hidden bullish divergence. diversion signals, more divergent signal. It was just giving us a lot of divergent signals. And look here at the end of the consolidation period. What did we get here? A hidden bearish divergence. And if you look closely, it dropped and it came straight back up. You could have caught that if you drew like a 1-to-2 risk reward ratio. You could have caught a few pips over there. But I like to catch the trend, and always the number one rule in trading is always trade with the trend. So look what happened here. Look at the RSI. Look how the RSI is now below the white moving average and below the 50 line. So this is not a normal RSI. You have to have a middle line. It's a 50 line, and anything below, it's a bear market. Anything above, it's a bull market. And look what happened here. Where is this crossover? Right there. Right there. And look what happened in the RSI. It dropped, boom, and then it gave us a hidden bearish divergence signal, and the market started dropping. This is how you know that there is no more movement and momentum in the market to keep it going for longer, and the sellers are coming and they're going to win, and they did. How do we know? We look at the RSI, and you just really, I always guys, you have to have a 2 to 3 minimum risk reward ratio. So let's say all the moving averages crossed over here. Obviously it dropped, you wait for the retest, and let's say you waited to here, and then you could take that above the previous high, and you could have targeted a 1, let's say, to 3 risk reward ratio. Don't be greedy, guys. Look at this. This little move by itself was 126 pips with the right lot size. That's a lot of money, guys. I'm telling you, that's a lot of money. And this thing happened within hours. Hey, let's see. Literally within a few hours, you could have got 126 pips. This is crazy, guys. This is the easiest thing and the most simplest thing out there. There is no secret. There is nothing shit what you hear on the there is none of that shit that you hear on YouTube, and oh, my strategy is 99% win rate, blah blah blah. It doesn't matter if your risk reward ratio is in place, and you basically, let's say, risk 1% of your capital per trade, but your risk reward is 2 to 1 to 1 to 2, 1 to 3, then each trade you could be making 3 times the risk. So then when you take a loss, it won't affect you at all, and it will always keep your capital nice and clean and safe as well. But yeah, guys, so this is the strategy for today. You can always drop down to the, what do you call it, the smaller time frames for entry. I usually go for the 15 minutes or the 1 hour for entry. But yeah, this is what's happening with gold. I'm busy watching it very, very closely, and as you see here, on a major support and resistance zone, it formed a head and shoulders. So this could be huge, guys. I'm really, really watching for this, and as you can see, I have an alert that will notify me as soon as this thing happened. So yeah, guys, this is the strategy I use. It's called the 3-line strike. You know, a 3-line strike, and you wait for a breakout and a retest, and you just ride it all out. This is also another pair that I trade and watch. Look at this. It's coming. It broke through a resistance, and now it's using it as a support. It came to retest. Buyers pushed it up. As you see the wick. Zoom for you guys. See the wick over there? That's a lot of buyers pushing it up. So we'll test, and we have a bullish divergent. That's when the market it's forming a lower low, because this low is lower than the previous one, but the RSI is forming a higher low. That's a bullish divergent, and it's gonna go up. But yes, this is my strategy for you guys today. This is the video. I hope you guys really enjoyed it and benefited from it. If you really did, if you saw value, please hit that like button, subscribe, and share the video. You know, you might help somebody else out there. So yeah, please share the video, guys, subscribe, and that would be really I'd be really grateful. And I will see you guys in the next video. Peace.